Hi everyone, this is Anubodho back again with yet another video in our insurance consulting series in this channel. So if you have gone through some of the past videos, you have seen that currently we are in our life insurance journey where we have seen term insurance, we have gone through what is a whole life insurance, universal and variable universal life insurance, and today in this video we will cover what is a ULIP or unit linked insurance plan. So as you can see, a unit linked insurance plan is basically a multifaceted product that provides two things, right? It provides an insurance coverage. It also provides an investment for you, right? So simple things, it's giving an insurance and it is also giving you, it's working as an investment channel for you, right? So part of the premium is used for insurance coverage and the remaining part is basically pooled with the assets of other insured people as well, and together it is invested in different financial products like equities, bonds, mutual funds, say commodities, money markets, so on and so forth, right? So that you invest 100 rupees today and then that 100 rupees is getting invested in different insurance products, and then the insurance company will try to give you a certain percentage of return out of that, right? Which is the gain for you. So it is giving you insurance, it is also giving you a certain financial gain from the same product which we are calling ULIP, right? Now ULIP normally has a 5-year lock-in period. So what does that mean? That the entire premium amount that you are going to pay for a period of 5 years is going to be locked in with the company, but it will continue incurring the interest or basically the additional amount that you will get, that is continuing to get incurred, but you can't touch the principal amount as well as the interest for the first 5 years, beyond which you can start utilizing your money, partially withdrawing your money from the fund that is getting generated. So if the plan is surrendered before the lock-in period, what happens? You can do it, but you have to pay a certain amount of penalty fees, and also there is a tax implication to it. The main underlying risk of ULIP is basically the financial product in which the insurance company is investing your money. So in case the investment product does not do good, then ULIPs may end up losing your invested capital, right? So unlike variable insurance, life insurance, where what we have seen, right, that the person who is the insured, you have the entire independence of selecting that which financial product your money is getting invested on. But in ULIP, that decision is being taken by the insurance company. So the insurance company is investing your money in the different financial products. You don't have to take up that headache in ULIP, right? So those are the features of ULIP. Now we are going to see what are the advantages and disadvantages of this product. So the obvious advantage, which is the first point we spoken about, it is giving you a dual coverage, it's giving you an insurance, it's giving you an investment as well. The second important, and it's very unique to ULIP, is it is giving you the flexibility of fund switching, right? So say for example, you have investment X amount of rupees in so and so securities, but after a certain amount of months, you think that no, these securities won't do good in the near future. I want to switch my fund to certain other bonds. For example, I want to switch my money from security to bonds. I can do that in an ULIP, right? Third point, as ULIPs provide long-term investment, it's good for building wealth, right? Because you're not touching your principal as well as your interest for a certain amount of time. At the end of the day, after 5 years or after 7 or 10 years, when you're picking up your money, it's helping you build up a corpus along with the principal that you have investment. And following the lock-in period, ULIPs allow for partial withdrawals to meet the urgent needs of the insured person. So these are all the advantages of this product. Whereas the main disadvantage is the charges of premium allocation, policy administration and fund management. So basically for doing all these things, the company is charging you certain amount of administrative fees, which is a little considerable amount in terms of ULIP. So that may eat out to the percentage of return that you're going to get at the end of the year if the investments are not that good. Second point, because of exposure to market risks, there's always a chance of losing part of your capital contributed to the policy. And the other point that we have spoken about is, to some extent, it is non-flexible because the initial 5 years you are in the lock-in period. So now, considering all of these things, we are going to see that who is this for? Okay, ULIP is going to be bought but by which segment of customers, right? So people who are looking for a combo pack of insurance and investment, definitely it is for them. Now, if we deep dive a bit, we will see that the coverage may not be equivalent to the price paid, as a considerable amount of money is actually going in the policy maintenance. So for pure insurance, if you are looking at very high coverage, maybe this is not for you. If the coverage required is comparatively low, okay, and you also want a kind of a stable and substantial return from the same product, then ULIP is good for you. Based on the based on the kind of products invested in, you should ideally go for ULIP if you're looking for a medium kind of a insurance and also a stable kind of a return at the end of say 7 to 10 years. For people looking for high liquidity, and the last point why I have bought in is just to compare it with mutual fund, which is easy to understand. Let's say for people who are looking for high liquidity and potential high return, that you want say money at any point of time every say 3 months, 6 months, whatever, then in that case it is better to go for a mutual fund and not for ULIP, right? But those people who are looking for more security and a stable long-term return, okay, out of a product, along with the benefit of also having an insurance, a considerable insurance, not a very high coverage, then definitely ULIP is the way to go. Okay. So I hope I could understand, explain that who is this product for, and we also covered the basic features and also the advantages and disadvantages of a ULIP product. Thank you for your time. In the next video, we are going to cover what is an endowment plan or an endowment life insurance plan. If you're liking my videos, I hope you'll consider liking and subscribing to the channel. Thank you. We'll meet you soon.